What's going on, everybody? Q here from Hyperstocks, and today I'm going to talk to you about 3 stocks in the artificial intelligence space that you do not want to miss for an investment portfolio. The first stock on that list is, of course, Nvidia. Nvidia has been a favorite of ours for years now. In fact, 1 year ago, we released a video talking about Nvidia moving to 1,000 and splitting just based on projections and overall market momentum. Since then, Nvidia did move to that 1,000 mark and it did indeed split. And so you're probably wondering if the stock is still worth a buy. In order to gauge whether the stock is still worth a buy or not, we have to look at the artificial intelligence market size as a whole. When we look at 2024 in specific, we see that the AI space measured at a market cap of about $300 billion, growing tremendously from where it was 4 years ago. And when we look at the top players in the game, which is Nvidia, we see that their yearly revenue grew very much alongside of that artificial intelligence growth, which makes Nvidia the top player in the name, and it continues to be the top player for the years to come as long as they can upkeep the technology. Now, the years to come have a lot of growth in store for artificial intelligence. You can see that the market is expected to hit $2 trillion by 2030. And Nvidia is expected to continue growing at a tremendous pace in the coming years, which means that Nvidia's stock may still be a bargain if they can continue delivering on their revenue and earnings expectations. Their current earnings and revenue expectations will still allow them to more than double in terms of their stock price, and we expect that number to hit 150 and 180 to 200 in the coming years and the coming months. We have been Nvidia since November of 2023. We did talk about the stock splitting. It hit that 1,000 mark, and now our next targets are going to be 150 to 200 on the stock. And so if you are looking at Nvidia for the short term, the stock is still strongly bullish above 117 and it can continue going and going. If it breaks below 117, we expect a pullback to around 107, which is a point in which we will add even more shares to our existing positions. Now, Nvidia is not the only name in the game that's benefiting off of the semiconductor and the artificial intelligence boom. Companies like TSM have also benefited tremendously from the artificial intelligence boom, and we can see that they're expected to continue benefiting in the coming years. TSM in specific is a favorite of ours for a very specific reason, and that's because they have become the sole maker of Nvidia's AI GPUs, which makes them an essential player in the artificial intelligence movement. TSM also recently got a subsidy of $6.6 billion from the US government to ramp up production, which indicates that even more further growth is to come. Why is this important? It is important because that the US and China are currently battling to become the top players in the AI industry, and the US does not want to lose that game. So they are injecting billions of dollars to companies like TSM, like Nvidia, in which is expected to aid the company's growth in the coming years. Now, TSM has been a play in which we took around 160, and it remains to be our favorite, even though the fact that it has reached our first price target of 180 already, and our next price target is going to be around 200 for the stock. So if you like TSM and Nvidia, there's one way to get exposure to both without having to take on a single stock. You can enter what we call an ETF, or an exchange traded fund. And our favorite semiconductor ETF is going to be SMH. Now, when we look up SMH, it has rallied alongside Nvidia and TSM because of the fact that this ETF holds Nvidia as TSM as their top positions. You can see that SMH is a basket of stocks. Their top position, which is 25% of their assets, is going to be Nvidia. And next up is about 13% of TSM. Now, one thing about technology, semiconductors, and artificial intelligence is that they're moving at such a rapid pace that which Nvidia is actually exposed to a lot of risk. Because if Broadcom, Micron, or one other semiconductor company can come out with even a better chip that can overtake Nvidia's power, these guys will easily rise their way to the top spot. And SMH is one of those ETFs that has exposure to so many of these semiconductors that they can continue going up even if another company becomes the top player in the space because they're already holding that stock. So when we're looking at SMH, we did have some price targets for you guys. Unfortunately, it has already moved to our first price target, but we do expect it to continue going. SMH, we entered around 207. Our first price target was around 240. SMH is currently at 276. This is one that we'd like to pull back before entry towards the 250 mark, and then we would ride it towards the 300 mark in the coming years as Nvidia and TSM continue to grow.